Mueller sticks it to Trump, Congress is worthless, and the markets are in big, big trouble. What's up, everybody? Welcome aboard to Bubba's Bottom Line. It is Sunday, June the 2nd, and here we are. And of course, what a week, another down week for the markets. But I think one of the big stories of the week is how the Mueller report stuck it to Trump. And obviously, we can see that he also has some left bias, wants to make sure that the impeachment talk does not die down. And what we had was a couple of these sentences that he used when he was putting the report that we can't rule out a crime, but because the president can't be charged with a federal crime, we couldn't do anything. And that's obviously, the report is out for them to read, and it's obviously an interesting take, but certainly a way that the left can keep the pressure on, and of course, making Congress absolutely worthless, which is typical, okay? Again, it doesn't matter who's in there, but this time it happens to be the left, and it's worthless because they're worried about one thing and one thing only, and that's how to impeach the president. They don't care that the economy is falling apart. They don't care about the troubles on the border. They don't care about anything but impeachment. Now, you tell me, okay, that our elected officials can only care about one thing. And again, I don't care what party you vote for or what you care, what side you're on. If you can agree with what's going on in Congress today, then maybe you got a problem. Because again, they're not there to worry about the nonsense. They're there to make the American way better and to get things passed that make our society better, and not worried about something that's not going to get done to begin with. Okay, so it's a total waste of time, totally ridiculous watching all these imbeciles working on the Hill to work on impeachment instead of taking care of America, which is what they were elected to do, to take care of their constituents, to take care of their districts. But no, we will continue to go through this, and certainly we'll be going through it till the next election and probably past that, because I would say that the current President Trump will be reelected once again. And despite it all, the economy has managed to hold on. Of course, we are entering, I think, as I said the last couple of weeks, I think this is the very early stages of a recession. And as they say, we've only just begun. A lot going on and a lot of things to be done, but certainly you are seeing some changes. If you take a look at the transports, we're certainly not shipping a lot of goods, which means that things are slowing down. A lot of issues out there, and of course we've got the continued battle of the China trade wars, where now China's threatening to hold back on their rare earths, and which I guess goes into a lot of the electronics that we use, a lot of the cell phone technology. I'm not all that familiar with all of it, but I obviously can read and I can hear the discussions. But again, we go back to, without us, China does not have the same society that they have. I think it's really that simple. When you look at it, there are other rare earth materials around. I think that companies can move away from China and go to other places for that labor, and they can always come back here. And again, if you think we're going to be paying all that much more, as I believe, okay, is that all this tariff and trade talk is enough just for these companies to go ahead and raise their profit margins as usual, okay, because they're already plenty big. Again, don't we read the profit reports each and every quarter at how much profits they continue to bank away? So if we're really worried about that, I think it's a mistake. And of course, we had the big bombshell on Friday, where we're going to see some tariffs on Mexico. Now, that will definitely resolve. But of course, if Congress would pass the MC, the whatever the new bill is, the new NAFTA, okay, USMCA, whatever it is, if they would just get that done, okay. But of course, that is not going to get done because we have to continue to worry about the impeachment. All right. Again, it's really sad to see what is going on here. And of course, I agree with the president 100% here on what he's trying to do on the border because I believe that he's right. Okay. And of course, the news and the stories is not enough. Even the left bias media can't deny the troubles on the border. But of course, we will continue to go on this path and more the path of destruction because of course, what the leaders are worried about is what their fair share cut is going to be, not worried about you and me, the American middle class and the American people. So again, look at it from any way you want. That's the end of the day. That's the bottom line. It is as simple as that. And so we are moving rapidly into the recession, but of course, no economist will come out and say, because they won't recognize it until 10 years from now. But it's obvious, you can see with what's going on with small business and the continued destruction of small business. Right? You know, again, they come out with ridiculous compliance issues and things that make small business jump through hoops that they could never pay the cost to get things done that they want to get done. Those are the things that they work on. How to destroy the American small business. It's really pathetic as to what we're watching and seeing. But of course, again, when you can see some of these people out there and what they're trying to accomplish, it does make sense that they really would like to wipe out the small business. It is quite sad and will affect a lot. And of course, that's the same thing we've seen in the banking industry for 50 years, where they continue to crush the small banks, okay? The banks that are really needed, which are the small regional banks, which are helping farmers and small business and where you can go in on a handshake. And now they've overregulated many of them out of business, allowing the big banks to come and swallow them up, okay? And then bang you on the head with ridiculous fees and all this other crap that we have to deal with. So again, we're not headed in some of these areas in the right direction. Again, and I think that is the attempted switch over, and I think it's the ways of trying to build on the Fed's legacy of turning everybody into busted and letting the few capture all the cash, which then would bring us right into the socialism debate again. And again, if you read or ever have heard of the creature from Jekyll Island or follow the Fed at all, 106 years of failure and still going on, and it looks like they're going to make another failure once again as the bond markets price in about a 0.5 point rate cut. We see negative rates throughout the globe. We see the yield curves inverting everywhere. And of course, what that's really saying is that, of course, these central banks had no clue, didn't have any idea what to do. And their answer to everything is to try to print more money, bring rates down, and continue to do garbage, okay? Which shows you how smart they are from a book theory standpoint, okay? But how ridiculously unaware they are of what common sense is. And unfortunately, common sense is not something you can necessarily teach to people. But obviously, again, we could take all these people and throw them in the middle of a cornfield. They'd never find their way home, okay? Because they don't know that the sun rises in the east, okay, and sets in the west. Again, it's rather comical to watch and listen to what these folks say about what's going on in the economy when it's very simple to see that things are slowing and things are changing. And there's some liquidity problems at banks, okay? Once again, you don't think we're not going to run into that same problem? Do we really think that this time is going to be different as debt continues to mount, as we continue to get deeper and deeper in the hole? All right, and I'm talking about individual debt. Now they keep talking about, well, the savings rate is much higher. Well, I'd like to know who that survey comes from. But I do know this: the consumer confidence survey they continue to talk about that is off the charts to the upside. The last time it was off the charts to the upside was 2007-8. The time before that it was off to the upside was 2000 and 2001, and before that was 1986 and 1987. And I think we all know the final results of those periods. And again, now I'm not telling you that the markets are not going to go up in the future and in the long term. They go up 8.5% approximately year over year. Okay, but there are issues that do go up, and after a 10-year rally that was built with a house of cards. Okay, again, you can say what you want. Okay, we were built, this whole rally, this whole market, okay, was built on mirrors and a house of cards that was propelled by cheap money and by the ability to bail out the banks and by the ability for companies to borrow money so cheaply that they could buy all their stock back to keep the fuel firing in the market. Okay, so we'll see how it plays out as we go into the third and fourth quarter with earnings, which I believe are going to start to be some dramatic misses. And you can already hear the built-in excuses coming, okay, about the too strong dollar, about the tariffs, about everything out there except what they can do about it. Because every complaint that they make can be handled by using a proper strategy to either hedge against dollars, to hedge against risk. But of course, that would not then give them the built-in excuse. So when they actually weren't doing as much business, they would have nothing to blame it on. It is, again, it's the same old story, and we continue to see it. But again, I think you look at the second half of the year, and I think you see some major risk components building here. And again, when you can borrow money, when you have to pay more to borrow money for 3 months than you do for 10 years, or vice versa, deposit money for three months and get more of an interest rate than you're getting for 10 years, that's an inversion of a yield curve. That is going to signal issues and troubles. But of course, we will continue to ignore it because, of course, the Fed will come in on their white horse, supposedly, and cut rates again, which, again, if the economy is as strong as I'd like to say it is, which I don't think it is, but if it's that strong, then why is everybody worried about a rate cut? Okay, that's really what it comes down to, is why are we worried about a rate cut? Okay, and that are some of the issues that we are dealing with in this market, which will, I think, take this market significantly lower over the next couple of years. In the meantime, this is Bubba's Bottom Line. I am Todd Bubba Horowitz, and of course, we're going to step out here for a break, and we'll be back with more after the break. What's up, all? Hey, listen, we're doing we're still offering our webinars for hedging and for futures. And of course, if you'd like to get your copies of the recordings, you can email me at bubba@bubbatrading.com. And next Saturday, we are going to have a webinar on our brand new managed portfolio product. Okay, you do the managing, but we give you the trades, the signals. And of course, it goes like with our futures, which just hit all-time new record highs. So again, if you'd like to tune in, you can go to the website starting tomorrow and get that link to come in and watch the webinar. And of course, if you'd like to get it directly from me, just send me an email. And lastly, we're going to, for the first time ever, for a limited time, because of the market conditions, we're going to go ahead and sell our hedging recordings, our 7-session course, okay, in which you can buy those recordings today. And if you decide that you like the course and you actually want to come and take the live course, you will be credited in full for what you paid for the recordings, and you'll be able to come to the class for the additional fee between what you paid for the recordings and the class. So again, it's something that we're going to offer for a limited time. You want to check it out? Email me, go to the website. In the meantime, let's get back to Bubba's Bottom Line with me. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you. And of course, another rough week for the markets, and we continue to hear excuses as to why. Again, we talked about this earlier. It's tariffs, it's this. How about companies aren't making as much money? How about we're just not spending as much? How about we're just in too much debt? How about, again, I could list on and on and on as to why. in the meantime, you are starting to see it, and the Dow is now down for, I think, the 5th or 6th week in a row. And as we said, we called the top based on the action, based on our algorithm on May 1st. Okay, so now we went through the entire month of May, basically blacked the card to the downside, and we expect to continue to see that action continue. We expect it to get uglier. We expect it to go much, much lower. Now, again, we're not talking about tomorrow. Okay, we are short. We are going to maintain our short. But what we do expect, okay, is there will be, and remember, do not chase this market down just like we don't chase it up. There will be opportunities to sell into this market. There will be rip your face off rallies that are going to go straight up and look so good you're not going to believe that you're not in. Those are the spots you're looking to sell into once they meet or reach a resistance level. Okay, that's what we're looking for. We expect it. I wouldn't be surprised if I don't think tomorrow, but it could be Monday or Tuesday. I wouldn't be surprised by Tuesday we get one of those giant rip your face off 600, 700, 800 point rally in the Dow, and that would not even change the position that we're in right now, that we're still headed lower. The markets are headed lower, and I think one of the key indications that we're going significantly lower is if you go back to last September when the S&P, the NASDAQ, the Dow, and the Russell all made new highs. The world was great. We're going to the moon. And of course, this year we had the NASDAQ and the S&P make new highs. The Dow and the Russell failed to do so. And now we're significantly away from there. And again, we look to be headed significantly lower. Again, we're only going one level at a time. So the first thing we'll be looking for is about 24,000 in the Dow, about 2,600 in the S&P. But again, the next levels will be below that, and then the next levels with that. And of course, we'll cover those during Bubba's daily updates as we get closer to the picture. But I would think, and this is a long-term view, not short-term, nor am I trading from this, but I would expect to see the Christmas Eve lows taken out at some point in the next 12 months. Okay. Again, I think it's going to be worse than that, but I think that would be one of the first major objectives after we take out these levels to the downside. Again, remember, within those markets and within those moves lower, there will be rip your face off rallies to sell. Okay. We've been talking about crude oil for weeks and where we wanted to sell it. We kept selling it, and we had targets, and we have now reached the next target lower, which is 55. So last week we reached 58 and we reached 55. Okay. Now the next target, the downside, is 50 to 52. We are now projecting that we end up going into the 40s at some point. Now you can listen to these jackasses telling you about, well, it means it's a slowing economy. It means this. How about there's just too much supply? Okay. How about there's just, we can supply as much as we want. How about that? How about the continued build in inventories on a regular basis? Okay. How about it's just that simple that, you have too much supply. It's very similar to the grain markets. Okay. As we've been touting and saying that we want to be buyers of grains, and they kept going down. Everybody kept saying, well, what are you, nuts? And I kept saying, there's going to be a point in time where the prices are going to be low enough that there's going to be a big, strong rally. Well, what did we see? We saw a 10% rally in soybeans. We saw a 25% rally in wheat, and we saw a 30% rally in corn. Okay. And with no signs of slowing down. Now, I would expect to see some pullbacks in those markets because they've gone parabolic straight up. That markets don't trade like that. So I would expect to see some pullbacks, but we're looking to still buy those pullbacks. Okay? There's a very good chance, okay, that there could be a big market over the next 12 to 18 months in the grains. Okay, which means we could get back over 5 in corn. We could get back over 6 in wheat. We get back over 10 in soybeans. Again, I'm not saying that's going to happen. I'm just saying there is a very real possibility that these things can happen. Now, you're starting to see the thing. Now, the original reason everybody was blaming the trade wars and the tariffs, well, the trade wars and tariffs have heated up and the grains have gone straight up. Now, you explain that to me if it's really got to do with the trade wars and the tariffs. Okay, what it had to do with is that we had such an oversupply, okay, that, again, you have too much supply, you have to bring prices down to move goods. It's as simple as that. Okay, again, we're technical traders, but the supply demand model does come into play at some point. Okay, now we're starting to see some very ugly trade in cattle right now, and it's hard to figure out why, but the charts are breaking down, and they have broken down. Now, I think somewhere down in here, we're going to be looking for a bottom. I mean, we're long and we're in trouble right here, but we're looking for an additional bottom. Okay, but what's been interesting, it has looked like it has been what we'll call forced liquidation. You saw, if you watched on Friday, right at the bell, okay, there was a dramatic sell where they just basically collapsed into the close on heavy volume again. So 2 days in a row, there was two gigantic sells of about 10% of the daily volume in 3 minutes. So to me, that's a sign of forced liquidation, which is more of a sign that it's time to get in, because when the banks start to puke and they start to show forced liquidation, that usually signifies the down and the bottom end of that market. Okay, again, it's really, as a trader, it is about that simple of things that you look for. Now, it doesn't mean you jump in tomorrow, but again, it means that it's in the bottoming process by what we're seeing and by what's going on. And of course, it now looks like gold has broken out and has broken that downtrend. Okay, we are covering gold. Okay, we are getting back out. We're getting out of our shorts tomorrow. Okay, we're short, and we're short from higher. But again, we're getting out of our shorts tomorrow. They could get to our short level, but we will be covering our shorts tomorrow and reversing. Okay, because now we have lifted off and broken back above that downtrend that we are in. So we never reached our 1240 target. We did reach our 1270, but never got to the 1240. And again, this could reverse back the other way, but based on the work that we do, we're going to be on the long side of the market, regardless of what happens in the next day or two. And again, if it changes back, then we'll have to reverse back over. But again, gold all of a sudden looks like it wants to go higher. It has now changed direction. Okay, and again, one thing you always want to remember about markets, if you want the truth, follow the money. Don't follow the opinions. Don't follow anything else. You follow the money. The footprints that the markets leave will always give you the highest probability position of being successful versus looking at what they're talking about on the news. Because what they're talking about on the news is bull. Okay, from the buy guy, okay, to everybody else. Again, not just him. They're all the same. Okay, so you got to be careful and understand that if any of the things that they do say are valid, then they're already priced into the market. Okay. Now, treasuries, wow. Okay. Now, again, we wanted to be short treasuries and we were early. Now, we did reverse and get long treasuries, but what a move. I mean, I haven't seen a move like this since 07, 08. Okay. And they're basically just going straight up. Okay. Yields are coming straight down. I mean, the 10-year's looking poised to go under 2% again. Okay, so again, when you look at these things, again, it's kind of scary, but it does show you how far behind the times the Federal Reserve is and how clueless they are as to what goes on, because if they would have done everything properly, they wouldn't be having this problem. So now they're going to have to cut again and go back into the cutting cycle. Okay, and so I mean, with mortgages now, mortgages ticked under 4%. Okay, so you want to buy a house, you might get much less than 4%, but I doubt it. You better be buying that house right now and locking in, because again, where are you going to go? 3% maybe. Okay, so I think it's important to take a look at. Meantime, the cryptos had a nice pop and did pull back from 9,000 as we thought. I think that you have to look at the markets. Okay. And as I like to teach my folks, it's like a big poker game. Okay. Remember, there's always another side of the trade. There's opponents out there. Make sure you study your opponents and understand what they're trying to make happen here and how they're working markets, because it happens all the time with the big banks. They're trying to push markets in one direction because that's where they want to load into. So in the meantime, this is Bubba's Bottom Line. Todd Bubba Horowitz. We're going to step out here for a break, and we'll be right back with my commentary after the break. Bubba's Bottom Line. Todd Bubba Horowitz will be right back. All right, kids. So listen, next week we're doing our webinar on our new new equity portfolio management using risk reversals, creating synthetic stock. They're killing it. They're doing just great. And of course, it's like our futures portfolios. You're always in, you're always long or short, one side or the other, depending on what the algorithms tell you to do. And of course, we just set all-time new highs in all portfolios last week, and we'll continue to do so. So looking forward to it. If you want to get in, it'll be posted on the website tomorrow. You can email me for an invitation, but it will be next Saturday at noon Eastern time, and I'll explain exactly how the program works and what we do with it. Also, for the first time ever and for a limited time, we're going to release our hedging series, our hedging webinars, recording our class, our 7-part class, which we will be selling. Okay. And of course, if you decide that you want to get a jump on everything, what's going on in the market, and you want to hedge your portfolio and be another one of the people that send me great emails every day saying how happy they are that they're hedged, then you can start that. And if you like it and you want to join the actual class when we come back in the fall to teach it, you will get full credit for whatever you paid for the videos. In the meantime, also don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Okay, let's get back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you. And of course, it is Sunday, June the 2nd. And, I tell you, I watch as little media as I can. Now, obviously, I am part of the media. I am on, 4 or 5, 6 times a week. But I was so disappointed watching last week at the coverage that they give and the way they talk about things. I found it rather nauseating to listen. And these are some of the people that I respect too. And I'm not going to mention names, but you can figure it out. But in the meantime, it was rather embarrassing to watch and listen how they talked from anything from the tariffs to interest rates to anything else. And everything is la-di-da, everything is great, the world is great, except when they would talk about hogs, it was like they were trying to create some massive fear that, oh my God, hog prices are going to go to the moon because we're going to be a shortage. Look what's going on with the swine flu. In the meantime, where did we go? We went down, okay? Because we said on this program a month ago that the swine flu meant nothing because the markets already had it accounted for, which is why hogs rallied 42%, okay? Again, we already knew about it. So why are we trying to create fear now? Okay, I don't get it. I don't understand it. And of course, with the big selling on Friday, oh, the algorithms, they're killing the market. Does anybody realize that the algorithms also buy? Does anybody realize that the true algo programs are trading back and forth in the market? They're actually replaced market makers, that they're working for fractions of a penny on huge volume. Do we realize that? Or do we want to continue to blame the algos only when the markets go down? The algos had nothing to do with the rally that went up. They only part of the story when the market goes down. Now, isn't that a crock of crap? Okay, to continue to listen to them spew what's going on when they have no understanding themselves. I find it disappointing, okay, that we watch and people get trapped and put bad stuff on because they continue to listen to this garbage that has nothing to go with what's actually going on with the market today. Okay, whatever they're reporting is so old; it's already priced into the markets, and I think it's a great disappointment when they continue to chirp at how good everything is. Well, just look around. You tell me how good everything is. Again, markets are down, lost $500 billion. The techs have lost $500 billion in the last 4 or 5 months. Okay, you tell me how good everything is. And nobody spots it. Nobody wants to say it. Okay, everybody's afraid to say that we're starting a recession. You know, that's part of the actual cycle. It does happen. And if we would let the free markets work, then the recessions would happen and they'd be over already, and we'd be on to talk to recovery. In the meantime, what can I tell you? I'm disappointed. Okay, I will give a big shout out to my friend Charles Payne, because I think he does a great job, and I think he does call it like he sees it, and I think he spells it out pretty good. So in the meantime, everybody have a great weekend. And always great to be with you. We'll see you back here tomorrow with Bubba's Daily Update. In the meantime, thank you for being here. We will see you tomorrow with Bubba's Daily Update. Have a great weekend, everybody. Enjoy the Golden State Toronto game if you're a basketball fan. Me, I don't really care. But in the meantime, if I were forced to take somebody, I would take Golden State today. Have a great weekend, everybody. Thanks so much. Bubba's Bottom Line. We'll see you later.